Here we have the current stock market update for SOFI Technologies Incorporated, stock ticker SOFI. Before we begin with today's chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So as we can see here, what we're looking at is the 30-minute price chart. And I do want to sort of drill in a bit more closely into this price chart to look at the 5-minute price chart as well. But I just sort of want to take a broader step back a bit here, just so that we can sort of understand where we are at the moment. As we can see here, we have seen this major price rally from roughly $6.70 per share, just above there, to this $8.52 price high, which was established previously. Currently what we're looking at here, focusing on mostly, is this trend wave movement that has been in place since roughly September 10, and then reached its price highs right around September 18. So, as things currently stand here, we did see half of those gains being given back, and we did see share prices then bounce off of the 50% retracement. I think yesterday in yesterday's video, I think we looked at a longer term time frame chart. It might have been a 4-hour price chart, and then in addition to that, what you saw there was an exponential moving average bounce as well. So overall, my thought about this stock currently was that you could have taken a short position into the D point of that prior harmonic trading pattern. But then that trading pattern has now played out, and we saw 50% of that entire trending move being given back, and then in addition to that, on the 4-hour time frame, we did see a bounce off of that exponential moving average. So in my view, that would have been enough to sort of close out the short position, close out that short bias, and start to expect a run higher. We are seeing a bounce here, and that is true. But I do want to drill in a bit more into the price pattern itself here, so that we can sort of see these more recent moves a bit more clearly. So what we're currently dealing with here, is a bit of a double top resistance zone that is coming in right just below $7.90. So at the moment, I would consider this to be a fairly critical level of resistance, because we're starting to, see, a double top formation that is occurring just as share prices are moving into this 200-period exponential moving average on the short-term time frames. So this is a 5-minute price chart. Every candle on this price chart is a 5-minute trading period. And as we can see here, this 200-period EMA really is providing some very strong resistance for the stock. And then in addition to that, and these are very short-term assessments that are being made here. But what we're seeing here is a break of prior support, which would have come in roughly here. And then this would rest right around 777. So, we did have a bit of a sideways trading range that started to develop here. We had 2 failures at this exponential moving average at the top of the exponential moving average cluster. That's the 200-period EMA. And then we did see sort of a range that started to develop here in the sideways direction, but now share prices have broken below there. So overall, this is a little bit we are starting to see a little bit of weakness here. Overall, in my view, the real question is whether or not that prior support zone actually starts to break. So we'll just sort of move back there once again, just to kind of assess what that actually looks like. So now that we can see that, there is a little bit of weakness that's starting to develop on that short-term time frame. I think what we really do need to see, if you're bullish on this stock, is a break above this $7.90 level that will sort of remove that double top resistance zone. But currently, the real level that I would be watching to the downside does come in it's right around 760 at the moment. So what we're seeing, it's roughly this price level right here. So that's this would be the 50% retracement. 50% retracement of this prior trending move, and then it was also a moving average area on the 4-hour time frame. So overall, in my view, this is really the level to the downside to be watching. I mean, if you did see a break below here, in my opinion, this would be sort of a pretty negative signal. You could then, at the very least, I would expect to see a retracement back to the 618 Fibonacci zone, which would come in right around 740. So, these aren't huge moves to the downside, but, the question is whether or not this major trend wave here has resolved itself to the downside. Ultimately, that D point of the harmonic pattern did send prices into 760. And the real question is, has that downtrend wave actually completed itself, or are we going to see some lower lows? Um, so, from here, if we did break 760, I have a little bit less confidence in this 618 retracement, even though that is a very important Fibonacci number. The reason that I have less confidence there is because, you're really not seeing very much in this area. I mean, there really isn't, there's not a lot of historical support to be found here. There are no moving averages in this area. This is sort of a, thin air, so to speak, right here. There's really nothing going on here to support prices. So you do have this 618 retracement that could hold things up from there. But that's all you have at this point at that level. From there, the 786 retracement comes in right around 710. And then if we did break below all of those, then you would be looking at a retest of that prior 670 price low that defined this broader uptrend wave here. So there are a few levels to the downside that should be watched at the moment. And the reason that I would focus on those is it's not necessarily that the outlook is turning bearish at this point, but on the 5-minute price chart, it is looking a little bit weak after posting this double top high right around 790. So that is the main level that I would be watching to the top side. A break above 790. Of course, you do have that kind of magical psychological $8 mark that you have to contend with at that point. But to me, the more significant area is actually 790. And I do think that if you see a break above 790, then you also see a break above 8 as well. To the downside, that major level is 760. From there to at the very least, I would expect a test of 740. And then you could honestly be looking at much lower price levels if these Fibonacci areas don't hold up prices. Ultimately, you could be looking at a full retrace of that entire price move. So to the top side, as we've said before, the main level to watch does come in at 852. If we can see a break above $8, I'm really calling it 790. I think if you see a break above 790, then you see a retest of that $8.52 area. And then from there, the main level to watch, of course, is this prior price high, which comes in from the end of February, roughly, which is found at $9.18. So here's the current stock market update for SOFI Technologies Incorporated, stock ticker SOFI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.